Yeah, morning trades. Looking forward to the Asian Equity Open. As it stands at the moment, our call for the ASX 200 is to unwind at 76.95. So about a 1.2% upside move on the open. The all-time high that we got recently was 77.03 and the all-time closing high was 76.99. So good chance we could see records being broken. The tailwinds are obviously there. We're obviously going to have a look at the financials. The banks did roll over recently after CBA's results, but we look to be recouping those losses. And potentially the ASX banking sector could be making a new higher high in this run today. So that's obviously going to be really important to see whether the broader index pushes higher as well. We do see materials and energy firing up. We've seen that from the sectorial leads from the S&P as well. Now, if we have a look at the Japanese market, the Nikkei, we're potentially going to see an all-time high coming through there pretty soon. We're expecting that market to open up about 1% higher. That's our call in the cash market at the moment. And that market is in absolute beast mode at the moment. You can chuck at a recession at it doesn't matter. Market doesn't really mind too much about that one. You can see it's just in this strong, impulsive move higher. Pullbacks are being bought. And I wouldn't be surprised if we did seeing the all-time high that we got back in December 1989, around 38,957. That should be tested fairly in the short run. We'll see if we can break through there. So new records are potentially in the mix for the Japanese equity market at some stage soon. Going to Europe, and we can see the tailwinds there. We've got the Euro stocks, the DAX, and also the CAC making new highs in this run, coming through in the cash markets there as well. So those markets are in beast mode as well. They're breaking out, looking technically, doing everything right in this situation. Now, if we have a look at the S&P, we're not a million miles away from an all-time high there as well. We did see the S&P cash market close up 60 basis points. That's obviously giving us the tailwind. You can look into those sectorial moves that we talked about there. And there has been some rotation under the bonnet. You can see that the tech sector, mega cap tech, has looked heavy today, maybe a bit of rotation coming out there into more value areas of the market. You can see that the energy sector is really pushing up quite nicely. We've seen a really strong move up in the crude price, up over 2%. REITs have done well. If you have a look at fixed income across the treasury curve, it's been pretty benign, to be honest. Very flat moves. But we did see a very poor retail sales number relative to expectations that was down 80 basis points, and the control group was down 40 basis points. But the bond market hasn't reacted too much, and as you see, yields are pretty much unchanged. Maybe a small net change to the downside, both in nominals and reals that played through there. But you can see that REITs have benefited from fairly benign tape that's come through. You can see materials working well and tech down very smalls there as well. But you've seen a pretty heavy tape coming through in Nvidia. Obviously, next week's going to be a big one there. Everyone's getting set for their earnings that come out after market on Wednesday. The implied volatility in that stock is significant, around about 11% movement up or down. So obviously something we are watching very closely. Google's had a big move down. You see Microsoft down about 70 basis points as well. And maybe some of that money has rotated into these areas that have been left behind. You've seen also the KRE working well on the regional banking side, up 3.2%. Most short baskets are doing quite well. So these high short interest stocks are working quite nicely. And it's the Russell and the small caps that's been the big outperformer there. So again, mega cap, mega growth tech stocks, sort of rotating into some more value areas of the market playing through. If we have a look at the dollar's been heavy on the trading session. We are trading a little bit lower in the Dixie. It's been a bit of a messy tape, but you can see it's under a little bit of pressure. We are watching to see if we can push down to 104 in the dollar index. That's where there's been some big support recently. I mean, obviously, if we're going to get down to those levels, then you're probably going to see the dollar index maybe pushing into sort of 108.28 into the 200-day moving average to the top side in the euro dollar there. You can see that the pound's had a nice move up, well off those lows, despite going into a technical recession in the UK. The market doesn't really mind too much. This has been about dollar flows that have played through. So the dollar's been pretty heavy on the day, certainly against the stocky, the Swiss franc, or I think the Swiss franc's probably more of a positioning exercise, given it has been underperforming recently. We've seen good gains in the Norwegian crown as well. So something we are watching there. Bit of gains coming through in the Australian dollar as well. So risk effects firmly bid up there as well. We've got gold back above 2,000. We've seen the copper price up about 1.7%. So it's really a good risk on day with rotation coming back into certain areas of the markets that haven't performed. Mega cap in the doghouse to an extent. So an interesting one. Watching this Asia markets, can we see new all-time highs in the ASX 200 and can the Japanese market push that way as well? We'll see.